Deutsche Bank has unveiled its new strategy, its version of a crash diet, trimming the fat and aiming to emerge leaner and fitter for the challenges ahead. I'm Jamie McGeever and this is today's Market Pulse. With me now is Ralph Silva, founder of Silva Research Network. Ralph, Deutsche is aiming for post-tax return on equity of around 12% by 2015. Is this a sign of the bank's reduced ambitions?
Well, it's not reduced ambitions, it's the reality of the economy, and I think they have to have a more realistic view on this. But the cutbacks that we're seeing are not wholly because of the economy, they're also because of the evolution of technology. They have made massive investments in new technology. As a result, they don't need as many people, so they can in fact do a per transaction business that is far lower than it was in the past. So these are realistic targets, and I think they can achieve them, even if the economy doesn't recover to the extent that many believe it will.
I think they're aiming for annual savings of €4.5 billion by 2015. Of those, about 1.7 billion, 40%, is in the area of infrastructure and technology spending.
That's right, and we're seeing this as a trend. Not just Deutsche Bank, but all the rest of the banks are looking at the same thing. Let's put in technology so we can reduce our headcount, because we need to reduce our headcount. Transactions cannot cost as much as it did before. And Deutsche, let's give them credit where credit's due. They've made a massive investment in that area and a proper investment in that area, so they can have these savings and still provide the same products and services to their customers.
And on the capital side, they're aiming for a core Tier 1 capital ratio of about 10%. It's all very well, but some of its peers are already there. So should investors be encouraged by this?
They should be encouraged. The 10% target is a very good target to have, and as you correctly say, some of the other banks are already there. The problem is that Basel III may never be implemented. We may actually go into Basel IV. So having some flexibility in that, I think, is the most important thing, especially from an investor perspective. I would not invest in any banks that have these Tier 1 ratios that are locked in too specifically. They need to have some flexibility in that. And I have to tell you that Deutsche Bank, I think, has that flexibility, and I think if they have to increase it even beyond 10%, the current plan can actually do that.
So should investors be encouraged by what they've heard from the bank? They certainly seem to be in the short term. Their shares are up 1.2%. The Eurozone banking index is down 1%.
I think we should be encouraged, and I think that any banks that are making these wholesale changes within their organization is actually an encouraged thing. The banks that are sitting around and doing the same things time and time again are not buy opportunity. So I do think that Deutsche Bank is a buy opportunity. Unfortunately, because of the economy, I put them as a buy opportunity in the medium to long term, not the short term. Unfortunately, I don't see any of the banks as short-term gains right now.
Moving on and broadening the discussion out, we've got the official EU proposals tomorrow from Commissioner Barnier on banking union and the Eurozone banking sector. But for you, the issue of ring-fencing the banks is something that hasn't been addressed properly yet.
Yeah, it's something that we're discussing from a European perspective, not just a British perspective. And the discussion is maybe ring-fencing banks in Europe as relation to the ratio between investment banking and retail banking. In other words, if the ratio is wrong, then they're going to be ring-fenced. And this is going to hurt the universal banks. In other words, this is going to hurt the French banks the most. And this is the first time we're talking about these things. By no means is it a guarantee that it's going to be put in place, but the fact that the politicians are talking about this is of grave concern to the big universal banks in Europe.
So you think the big French banks, the BNP Paribas, the SocGens, they're in for a tough time?
I think they are in for a tough time, either defending themselves against this, which will take resources and time, obviously, and if it does happen, they're going to have to readjust their balance within their organizations. I'm not saying the balance isn't a healthy one, it is, but to get to that balance will take some time. And the fact that we're talking about this means that they have to think about it, and that's going to take resources away from serving their customers.
Which Eurozone countries' banks, you've just mentioned France, but which countries' banks should investors gravitate towards, and which ones should they avoid once we get the flesh on the bones of these banking proposals?
This is a very difficult question, because talk about it from a geographic perspective I think is inappropriate. And the reason for that is that even in Spain there are banks that are worth investing in, as well as Germany, as well as France. The problem is that investors are looking for shortcuts. There are no shortcuts. You invest in the banks that have the following: a very well diversified model. In other words, they have no more than 50% in each one of the lines of businesses, which is a healthy market. Secondly, they have really good geographic diversification. We don't know if Spain's going to go down. And lastly, they have to have a handle on their marketing and public relations area. Banks that are going against the government will lose, and you shouldn't invest in banks like that. If you look for those criteria, there are opportunities in every single country in Europe.
Very quickly, just to finish up, which banks in Spain are you thinking of specifically?
I'm very keen on Banco Santander. I think they do a wonderful job in all the criteria I've just discussed, and I think their future is sound, even though they may actually suffer quite extensively in Spain itself.
Okay, Ralph, thank you very much. That's all for now. My thanks there to Ralph Silva. That's all for now, as I said, but do join us at the same time every weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.